yesterday. So stronger than expected ADP report helped the markets. Then it kind of got another boost on the idea the Supreme Court was skeptical about the legality of most of these tariffs. What does that say about market sentiment about the tariffs? Does that mean that the market's hoping that they get repealed somehow? I mean, how is the market seeing tariffs? Because we were talking yesterday about the fact that maybe just the certainty of knowing what they are might be the best thing for the market.
Yeah, I think obviously the market generally doesn't like uncertainty. So, all things equal, you would have expected maybe a pullback yesterday. The fact that it was actually the other way means that the potential refund is going to overcome the potential risk at this point. Now, I think it's pretty early. We have this buy the dip mentality that investors have been employing really since April at this point. So taking too much of yesterday's move and applying it to the tariff conversation, might be a little of an exaggeration. But in general, it seems like investors are in a good mood. They're willing to take news with a glass half full mentality. And I think that's what you saw yesterday.
All right. So with that in mind, what about the action in the bond market? We saw yields move to the upside significantly, not majorly. It's not like we're above 4.5% again, but you saw the 10-year move up about 5 or 6 basis points. Some of that was the jobs report, but it seems like some of that was also the idea that tariffs could be repealed and there might be more bond issuances.
That's right. So if this happens the way that you suggested, that the Supreme Court knocks down the tariffs and we get refunds for corporations, that has to come out of the Treasury. So Treasury issuance would go up at that point. But again, there was a lot of good news from a data perspective. We've been in a little bit of a lull, obviously, with data coming out. So the fact that we had the ISM report yesterday and the ADP report, now we had the Challenger report this morning, which might offset a little bit of that. But in general, I think there's optimism for the economy at the same time that there's potential issuance. Both of those things work together to move rates higher.
All right, I want to go back to the market action. We were hitting on a number of the movers in the pre-market. It's earnings movers. So obviously we're still in the middle of earnings season. What do you make of this earnings season? Not only the strength of it this season, but the outlook going ahead. We've talked about this yesterday, too. The dollar's actually strengthened over the last 3 months. That's been one of the big reasons for some of these outsized beats when it comes to earnings. Should we start rethinking our view of earnings going forward?
Actually, I think the earnings trajectory is very strong. You've had the convergence not only of the AI-focused companies still staying strong, but a lot of the less paid attention to areas of the market are starting to accelerate. So by the time you get into next quarter, or even in the first quarter of next year, there's going to be this convergence between the large growth space, which has gotten all the attention, and the rest of the market. We've seen resilient consumers. We've seen margins actually much better than expected at this point. The commentary has suggested that we're not seeing some of the worst case scenarios that we've been worrying about. So all things considered, the earnings themselves are very strong. The reactions to earnings, I think, are a little bit interesting, though. We're seeing some of the more forgotten names rally off of beats, where companies like Palantir and Meta, some of the big,
well, those aren't forgotten names.
What I'm saying is the names that had been so strong coming into earnings, it doesn't take much to bring those down.
So listen, you brought up Meta. JP Morgan out with a note looking at retail trading. You just mentioned Meta. They say record buy the dip inflows into Meta. Generally, the Mag 7, they accounted for almost all the single stock buying. So are we over the bubble fears? We're going to be talking about this with the CEO of Cloudflare coming up. But is the market over the idea that this might be a bubble and it could be at risk, even though we heard from Ted Pick and we heard from another big bank CEO, and we keep hearing these kind of whispers like, hey, maybe you need to be worried about it. Is this officially the market getting over it?
Well, when you're in a position that I'm in, it's very risky to be kind of down the middle. In this case, bubble is obviously an extreme at this point.
Mm-hmm.
We obviously have echoes to what we saw back in the late 90s, but the complexion of the companies that make up the leadership right now are night and day to what we saw back then, and also the degree of valuation extremes are night and day. So obviously there's a little bit of froth, there's a little, expectations have caught up with reality in that AI space, so seeing a little bit of sideways movement in that is probably pretty healthy. We need the rest of the market and the rest of the world to hold up their side of the bargain as well.